Welcome everyone, and thank you for joining us for this webinar, which will look at how to avoid wages theft, covering aspects of the importance of avoiding accidental underpayment of wages, allowances and salaries. My name is Evangeline Kannis. This is the first in a series which MTAQ Queensland will try to run regularly. Having postponed this one last month, here we are. As most of us learnt in the past year, flexibility is an important skill these days. Today's webinar will look at avoiding accidental underpayment. We expect this topic to be of interest to business owners, directors, accountants who sign off on wages expenses, and all employees who do the payroll. There are a number of topics within this one heading, and this webinar is more of an overview. MTAQ Queensland's long history spans over 90 years. As a registered industrial organisation, this gives us ready access to represent members in the Fair Work Commission and to the Fair Work Ombudsman when needed. My work experience includes having discussions about wages and award issues many years ago with Mr. Ted Kowalski. It was a lovely opportunity for me recently to come to work at MTAQ Queensland and work with Ted until his retirement in 2019. We have welcomed the very experienced Ian Naylor, who works with me to advise and assist MTAQ Queensland members about all employment relations matters, including wages and performance management, giving warnings and dismissal, as well as representation of members in the Commission. We have a wide variety of people who are viewing this webinar who have very different backgrounds. This means that some people will hear things that they already know and probably want to go a bit deeper into the topic, and there are others who will be hearing things for the first time. The 10 topics covered in this webinar include what is wages theft, myths and assumptions, the legal obligations of business owners, directors and payroll officers, terms and conditions of employment, courts and who can claim, the role of the Fair Work Ombudsman, penalties and liabilities, in particular penalties that have been made on businesses which have done the wrong thing. What sort of wages and allowances should we be paying? Set-offs and commissions, and how to know which award to apply. What is wages theft? It is the underpayment of employee entitlements. When that happens, a civil liability is triggered, meaning those responsible will not go to jail, but they may be prosecuted or fined. When there is criminal intention behind the actions to underpay, and that would include dishonesty, intent to steal or defraud, and it's most easily seen when an employer does not repay the money the appropriate authority says should have been paid. Together, the underpayment of employee entitlements with some element of criminal intent is wages theft, which amounts to a criminal liability in some jurisdictions. This means when the court decides that both apply, the responsible person goes to jail and prosecution monies may go back to the employees who were underpaid. There is a long history of unions being concerned with some businesses who deliberately did not pay superannuation or wages. The Australian government's recent attempt to criminalise wages theft in national legislation did not get finalised. The Queensland government, however, introduced legislation recently making wages theft a criminal offence. This is to protect all employees in Queensland. It means that you, as employers or representatives of employers whose employees are covered by modern awards, do need to be aware of all your obligations. Here is a list of some of the common myths which I hear sometimes too frequently from employers. I pay above award wages and all in one hourly rate. I look after my employees. I buy them pizza every Friday for lunch. I don't charge them for the consumables when they use the workshop. I don't charge labour when they use the workshop. They only use my tools and don't bring in any of their own tools. Do some of these sound familiar? Many employers get themselves into trouble when they think it's okay to adjust for an overpayment. Overpayments can happen when an employer mistakenly believes an employee is entitled to the pay or because of a payroll error. The courts have been very clear. Employers cannot just take money out of an employee's pay to fix up a mistake or overpayment. Instead, the employer and employee should discuss a repayment arrangement. If the employee agrees to repay the money, a written agreement has to be made, setting out the reasons for the overpayment, the amount of money overpaid, the way the repayments will be made, whether it'll be cash or electronic transfer, and how often. And it must be reasonable. It must be affordable for the employee. However, if the repayment cannot be agreed, an employer should get legal or professional advice. If it's a mistake of fact, a mistake of law, there could be two different outcomes. And there are also issues in relation to whether it is possible to recover the money by taking the matter to court. Again, an employer or their payroll person cannot legally just make a negative adjustment in the following or a later pay if there has been an error for whatever reason. A deduction can, of course, be made to get back that amount that was overpaid if it's allowed under a registered agreement and the employee agrees to it, and if it's allowed under the terms of the award or some form of legislation, or if there has been a court or Fair Work Commission order. Members are, of course, welcome and should call the MTA Queensland first to speak to a workplace relations advisor to determine an appropriate strategy in terms of what and how to say to the employee when such error has been made. In one sense, there is also a sharing of the responsibility. By calling us, you will be seen to have attempted to get timely information to remedy the problem. When the items listed here are properly addressed through appropriate workplace procedures and fair written agreements which comply with the award's requirements, then there is much less risk of an underpayment being claimed. The problem which occurs with many claims is that the employer does not have any written records to defend themselves and find themselves feeling hard done by. Showing the appropriate minimum wages and allowances and penalty rates is one thing, but proving that a gift voucher is adequate to it in exchange for hours worked is going to be quite a challenge. I'll give you some time to read through this page. A misclassification can result in a substantial amount of money for some workers. Applying the wrong award may well also result in an underpayment if the penalty rates have been incorrectly applied. In any case, the Fair Work Ombudsman, and at times the Commission, may deem that there is a power imbalance between the employee and the employer, and it will often feel to the employer that the employee, or ex-employee as often happens, is being favoured. As all business owners know, there are many responsibilities and the wearing of many hats. Directors have obligations under corporations law, and payroll officers have obligations under the Fair Work Act, and the courts will look at the behaviour of payroll officers who have made mistakes and whether that mistake has been deemed deliberate may well cause the payroll officer to be seen as an accessory to the civil or criminal act, and if the payroll officer is seen to be willfully blind, which means that they did not check their own work or investigate something which a reasonable person thought should have been, that ignorance becomes actual knowledge under Section 550 of the Corporations Act. The result of an investigation which ended last year was a decision in the federal court that fined 3 outlets of a Hero Sushi franchise and their directors a total of $891,000 for underpaying workers and falsifying records. The penalty followed a decision handed down where the federal court found that a number of workers, many foreign nationals, or rather temporary residents here in Australia on international student and foreign holiday visas, had been underpaid $700,000 in just over 1 year. The federal court found that the employees were paid flat rates and not received minimum hourly rates, casual loadings, penalty rates, overtime, clothing allowances, and annual leave entitlements under the appropriate award. Thankfully, not one of our awards. It's not our industry. However, the inspectors had been provided with false reports on 11 separate occasions, which showed inaccurate hours of work and pay rates. In the decision, the Justice said that those in a position to ruthlessly take advantage of others, pursuing their goal of seeking to achieve greater profits at the expense of employees, and in doing so created a great number of false documents with a view to concealing the fraud being perpetrated. The lies were then told to cover up the wrongdoing. It was only when the game was up that those responsible admitted their misdeeds. Hero Sushi tried to repay all past employees and did repay all the ones it could locate. However, what this decision shows is that employees not only need to be correctly paid, it shows that simply back paying does not absolve an employer of liability. Employers must understand and comply with timely record keeping and payslip obligations under the relevant award and the Fair Work Act, and ensure that those records are readily available. The responsibilities are always on the owners and directors in the first instance. They will often try to shift the onus onto the finance manager and payroll officer. The important legal concept of accessorial liability means that people pushing the buttons, as it were, may be investigated and will be blamed for not knowing something, whereas they should have known there was a fraud going on or an underpayment. If the accessory to the wrongdoing was willfully blind to the fact that there was a minimum standard that should have been met, so the company will be proved to be liable regardless of lack of intent to pay below the minimum standard, the focus will turn on whether the person can be found to be an accessory, that they not only knew of the conduct, but also knew the conduct fell short of the required conduct, the minimum standard not being met. Saying sorry will not suffice if knowingly breaking the law, even if the payroll officer or accounts person is fearful of losing their job. Worse, if there are two of them breaking the law, then each will be investigated by the court and prosecuted separately based on perceived powers of each within the workplace. To some extent, the actual knowledge of the accused is still necessary for prosecution, and these cases can become quite complex legally. In this case that I was mentioning before of Hero Sushi, it looks like it was a case of being in it together with the owners and senior management. The lesson is for regular, transparent and independent auditing of transactions. The account manager in this case was personally fined $75,000. The payroll officers each $16,000 and $30,000. The company again sued for around $800,000 in penalties. Only some states have legislation making it a criminal offence to underpay an employee, and Queensland is one of them, along with South Australia, Victoria and Western Australia. There were changes proposed for the Fair Work Act by the Australian Government in late 2020, but these did not occur. The Queensland Criminal Code at section 391 defines stealing to include deliberate intentional behaviour leading to or underpayment of entitlements as a criminal offence. It can include unpaid or underpaid hours, unpaid penalty rates, unreasonable deductions, withholding entitlements, unpaid superannuation, underpayment through intentional misclassification of a worker, which could be wrong award, wrong classification, sham contracting, and the misuse of an ABN, and where authorised deductions have not been applied as agreed. The role of the Fair Work Ombudsman has certainly grown over the years. Its main role is to educate and enforce Australian workplace laws. It has officers who are legally allowed to investigate an employer's employment records, doing their job as workplace investigators, checking for compliance and issuing compliance notices where they believe there has been a breach, issuing infringement notices where mistakes have not been corrected, and allowing for enforceable undertakings where errors have occurred and there has been a commitment by the employer to fix those. The Ombudsman has established a number of compliance partnerships with large organisations in an attempt to further educate employers and assist employer organisations to ensure there is appropriate compliance with the Fair Work Act and modern awards. It will, as we saw in the previous case, litigate, take employers to court where they believe deliberately not complying has occurred, and they will seek prosecution. Importantly, there is a statute of limitation which applies to claims an ex-employee or current employee may make. This is 6 years, so an employee may claim that there was an underpayment of some form up to 6 years previously, and that's from the time the claim is made. That 6 years statute of limitation applies to all courts when claiming money. The Fair Work inspectors, as this page shows, have rights to look at all National Employment Standard matters, annual leave, pay slips, long service leave, etc. The unions can also make a claim, as can an employee or a contractor. The courts have their own sets of rules and processes. The Fair Work Commission can look at all types of underpayment claims. The Federal Circuit Court has 2 different paths that can be taken depending on whether the claim is above or below $20,000 gross. Similarly, the State Territory Magistrates Courts have small claims divisions if the claim is less than $20,000, or a separate process if the claim is more than that. A number of claimants have made allegations that they think they can get the other employees or ex-employees together to make a class action and put fear into the employer or former employer. So to be sure what a class action is, we do see them in the media. It's a legal proceeding brought by a person on behalf of themselves and a group of people who are seeking redress for an alleged wrongdoing. needs to be 7 or more persons, have the same similar related circumstances, and there needs to be a substantial common issue of fact and law. That's just to start making the claim. According to the Fair Work Ombudsman's annual reports, in 2019 to 2020 financial year, there were 54 litigations totaling some $4.5 million in court-ordered penalties. And you can see that the amount against individuals is roughly 30% of what was fined against companies. In the previous year, there were 35 cases and well over $3 million in penalties. That's just for investigations that ended up in court. And they're not all large companies. Some of them are relatively small. Earlier, the importance of using the correct award was mentioned. Each award has in it terms and conditions which are to be complied with in the workplace. It has requirements both for the employer as well as the employee. There are 122 modern awards. The employer needs to be sure that they are applying the correct award, the correct classification, which terms and conditions that are written into the clauses will apply under each set of circumstances, and why they are doing so, because it's the law. The terms and conditions, wages and allowances that are provided in these awards are minimum. They are to be paid at least according to these terms and conditions. Many employees find that their classifications are covered by a modern award. Separately, there are, of course, some employees who are not covered by a modern award, and they are what we call award-free. There are not many of those. There are some titles that get a bit confusing, that seem to be not covered by an award, but when the actual tasks, responsibilities, and duties on a day-to-day, week-to-week, month-to-month basis are analysed and written down in a job description, then the reporting lines are also looked at. It may be found that in fact that particular job is covered by an award, or it may be found that that particular job is in fact award-free. Assistance with these matters can be provided by the association to members. The minimum wages, allowances, and penalty rates that are to be paid are written into the awards. More may, of course, be paid according to the market rate. However, as we said before, unlawful deductions are not allowed. Many employers allow their employees to buy on the employer's account. The employee gets the benefit of paying wholesale rates or better than retail, and there may well be an agreement to pay it off over time via deductions to the wages. It is very, very important, as we've established, to have authority to deduct written agreements. MTA Queensland can provide a template. That authority to deduct means that the employer is mostly assured of getting their money back. Keeping up with paying the correct rate of pay and how much certain allowances are is always a challenge for employers. Fortunately, members of the MTAQ can readily access the MTA Queensland Consolidated Wages Guide online through the member portal. Using our wages guide, both the Vehicle Repair Services and Retail Award and the Clerks Private Sector Award classifications and the relevant wage rates are easily outlined. There are separate award wage guides for both the Manufacturing Award, which covers employers who manufacture, such as our caravan makers or engine manufacturers, and the Miscellaneous Workers Award, which covers employees who work under a traineeship. Now then, have you got your copy ready? We'll be looking through the Consolidated Wages Guide in the next few pages. You may download yours if you wish at mtaq.com.au, sign into the member portal, click on the Wages tab, Wages and Awards, then click on Wages and Pay to go to the next page, which contains the Consolidated Wages Guides. Hopefully you're getting familiar with using this page now, as this is where the new wages guides will be found. Remembering also that we should know by June whether the national wage case will deliver a new wage increase and what is going to happen with the superannuation increase and whether that is going ahead. The cover page of the Consolidated Award Wages Guide shows the most common wage rates used in our sector of the industry. The cover page shows the version date and brief statements about the amount of the latest wage increase with its effective dates. Public holidays are now found on the member portal and the document is downloadable. The common questions that come from payroll or in relation to setting costs and budgets is, what's the difference between a wage, an hourly rate and a salary? Are we using the correct classification? Is there an age-related amount? What type of tool allowance? What type of laundry allowance? Consideration of, if I'm paying above award wages, isn't that enough? And of course, am I using the right award? The Consolidated Wages Guide shows casual rates outlined for service stations to readily use, differentiating the different classification and times or days of the week for casual employees. The full-time wage rates for these classifications are located within the table of permanent adult employees. Apprentices' wages are occasionally confusing depending on the age that the apprentice has commenced the apprenticeship, but also depending on the age that they have perhaps recommenced. The correct minimum wage at commencement for an apprentice is generally based on their level of schooling. However, when an apprentice is 21 years of age or older, at the time of commencement of the apprenticeship, the time of starting their first year, then the adult apprentice wages are to be paid. We got a little bit complicated for a while there was a particular government incentive for taking on adult apprentices, which required the federal adult national minimum wage to be paid, which is higher than the first year adult minimum wage. But I don't think that's confusing anymore as time has moved on. Progress for apprentices is based on their annual date or their completion of modules, whichever comes first. Someone has completed their first year modules and it is not yet their anniversary date to go to second year, then they need to be paid second year wages from the time of the first lot of module completion. Sometimes employers and apprentices like to rush, and caution is urged to make sure that they have the skills and experience that matches the theory. Also, when starting an employee with the intention of signing them up to become an apprentice, both sides have 3 months to determine as a qualifying period or probation whether the apprenticeship will go ahead. So within those first 3 months, it is acceptable to pay the appropriate first year apprentice wage, provided the sign up occurs by the end of the 3 months. If that sign up does not occur and the employee is terminated, then it may be that their rate of pay needs to increase, or it may be that back pay is needed. If for some reason you've started them on a higher rate of pay and then done the sign up, you cannot then reduce their hourly rate or their gross weekly wage because they are now signed up as an apprentice. They can't be disadvantaged for being signed up. If there's any questions about this, please contact us here at MTA Queensland and we will help resolve the situation. There's a long history of the payment of tool allowance to apprentices. That amount that's stipulated in the award is required to be shown on the apprentice's payslip as a separate amount. Even if you supply a toolkit, it is advisable to have some sort of agreement that offsets the cost with the tool allowance. Otherwise, that apprentice will have a claim for that amount. It is a form of a wage And on that basis, the Commission will frown on any employer who is not seen to be paying it. The toolbox may be taken as a gift, and that does not in and of itself absolve responsibility for paying the tool allowance. Not in the way the laws are currently worded, which is why it's so important to have an appropriately worded agreement. In the terms under the Vehicle Repair Services and Retail Award, I'd recommend that that be done in the form of an individual flexibility agreement. And if you don't intend on keeping the apprentice, then have some sort of agreement to reimburse yourselves as the employer if you intend on getting that toolkit back. The other issue that comes along once in a while is that of paying school fees or the training fees, depending on who your training provider is. The employer is expected to reimburse the apprentice any fees or the cost of textbooks that the apprentice has incurred in completing their modules. And it's not just for completing, it's for successfully completing. It's recommended, of course, that this be reimbursed on an ongoing basis. And the employer should be mindful of asking the apprentice where the invoices are, if there are any. Adult apprentices are someone who commenced their apprenticeship when aged 21 years or older. The wage rate is based on the award at a minimum, plus the tool allowance. The appropriate wage rate may, of course, depend on whether a particular government incentive applied at the time the person started. Once the apprentice has turned 21 during their time, having commenced at less than 21 years old, there is no need to immediately jump to the adult apprentice wages. Once they've commenced as a school leaver under the non-adult apprentice wages, they're the rates that are to continue to apply. Moving on to the permanent adult wages and the casual adult wages, which are also shown in the last column on each of the next 2 pages. The table shows the classifications in alphabetical order. Sometimes that still gets a bit tricky, even for me, as the part sales people are not under P, they're under automotive parts interpreter or automotive parts salesperson. Sometimes it takes a bit of practice and a little bit of patience. To decide which classification or level to apply, refer to Schedule A of the relevant award. It is really important to classify the job and its responsibilities, not the person and their experience. The extreme example is the cleaner who is qualified as a brain surgeon. You pay the cleaner wages because that's the job that is expected to be done, and that's what's fair. The issue of paying market or above award wages applies separately. our advice is always to first classify the job based on its responsibilities using Schedule A, then determine which wage you're going to pay if you're going to pay above the award minimum. As I indicated before, language is important. What the workplace calls a yards person is in fact classified as a trades assistant under the terms of the award. And the difference between paying a level 1 and level 2 is the amount of experience that the person has. Another classification challenge can be when an employee asks the payroll person or their manager, why am I classified as a level 6 mechanic, but I'm doing the work of a level 7? I'm a tradesperson, why am I only classified here? Even if they're getting paid more, they want the recognition. Well, they think they do. There's a difference between the work and skills expected of a mechanic or other tradespeople at level 6, who may or may not have a trade certificate. So it's, again, the work done. And as we show on the next page, the work of a level 7, which, using the words of the award, is someone who is not only qualified, but also has specialised technical skills and experience that are required by the employer to be used in the workplace. And if they're not required by the employer, then that person is not and cannot be classified as a level 7. The history of all types of allowances in the awards is very long. The tool allowance is payable to all types of employees who are required to bring their own tools. But because of the history of this allowance, the history of tool allowance is such that, for all intents and purposes, the Commission would consider this allowance automatically payable, even if the workshop says we provide all of our own tools and the employee is not required to bring any of their own. If that's the case and the employer does not want to pay a tool allowance, that needs to be recognised in accordance with the award under an individual flexibility agreement. Even if the apprentice, I was going to say, but it could be an apprentice as well, or the technician is paid above award wages, an individual flexibility agreement would need to be written to comply with the award and not pay the tool allowance. Please make sure you get some advice from either myself or Ian in relation to complying with the award and making sure that whatever written arrangements you have will comply with the award. With uniform and laundry allowance, the amount is very clearly set out in the Clerk's Award, currently at $3.55 a week. In the Vehicle Repair Services and Retail Award, however, it's required, but it's unquantified. There's no amount set up. So we look at what's fair and reasonable when the employer, in accordance with clause 19.414, 14, uniforms. When an employer requires an employee to wear a special uniform as a condition of employment, the employer must reimburse the employee for the cost of purchasing and cleaning the uniform. There's no reimbursement required where the uniform is supplied and cleaned free. However, where the uniform is supplied by the employer without cost and cleaned free of cost to the employee, the uniform will remain the property of the employer. Now, generally, we'd recommend an amount similar to the Clerk's Award of $3.55 per week. Again, shown as a separate amount or in writing as an above award agreement in the form of an individual flexibility agreement. Whether something is a uniform or not is at times controversial, and one of my first criteria that I ask is, what's the penalty if the employee does not wear their uniform? If the answer is that they're sent home to get changed, or that they do not face the public, then I'd suggest it is perhaps not a uniform. But again, each case is different, and we're happy to assist to make that determination. When looking at the appropriate minimums that need to be paid and comparing that with the perhaps going rate, the following calculation is a good place to start. If, for example, a mechanic is paid $30 an hour, what is assumed within that hourly rate? Is it the award minimum wage plus tool allowance, plus annual leave loading, plus uniform allowance, in which case that comes to about $910 a week gross, compared to $30 an hour for 30 hours a week, which comes out at about $1,140 gross per week. Obviously, the better off overall test, which is basically what this is, shows that the loaded or flat hourly rate in this case is appropriate, and an individual flexibility agreement is strongly recommended if that's the way the employer and employee want to go. An individual flexibility agreement is one which outlines how the employee is better off overall, showing that calculation, and it keeps the employer compliant with the award's requirements and makes it a lot more difficult, in fact next to impossible, for an employee to come back later and claim an underpayment of wages. If you do have individual flexibility agreements, make sure that they are being checked and audited and that they are keeping up with the latest award wages. They don't need to be registered with the Fair Work Commission or anywhere else. They can be cancelled with appropriate notice. They must be entered into voluntarily and after the employment has commenced. A draft template is of course available for members either on the member portal or by request, and the Workplace Relations advisors are more than happy to review your documents before you proceed or in the process of negotiating. With the new changes that have been made to the Fair Work Act, the definition of casual employment has been clarified, and this has been much needed by employers. There are, of course, specific ways of paying penalty rates and specific provisions for what the casual loading is meant to cover. In any case, it is useful that these be properly defined in any contracts of employment, and that the minimum wage at each time is properly paid. The casual rates are shown on the Consolidated Wages Guide, and if there is any issues or clarification needed for the penalty rates, then please check the award, and of course give us a call or send the advisors an email, and we'll provide clarity to make sure that you're paying the minimums. Paying someone the appropriate minimum, as I said earlier, does come back to paying them according to the proper classification. One of the more entertaining questions that I sometimes hear from the dealerships is, what's the difference between a courtesy car driver and a driver of a commercial vehicle? And of course, a lot of that question depends, or the answer to that question depends on what the courtesy driver is in fact driving. And generally, if they only need a standard driver's license, then they are not a commercial vehicle driver. Junior wages are in themselves somewhat simpler than the adult wages, in that there is a selection of two to choose from. Either the person falls into the classifications of level 1 or does the work of a classification identified as a level 4. On the Consolidated Wages Guide, the wage rates are shown appropriately, and also the casual loadings are shown as well. The Manufacturing Award Wages Guide provides appropriate wages for the commonly used occupations for relevant employers covered by that award. As you see, there's a different commencement date for the latest national wage increase. Having a trainee is not the same as having an apprentice. It's a different qualification and a different level of expectation from the training provider in the modules which are outlined by the Queensland Government. There are generally two types of trainees that we use in this industry, coming from level A or from level B. The length of the traineeship is much shorter than an apprenticeship, and the type of wage is going to be quite different as well. It is not based on age. It is purely based on how long that person has been out of school and what their highest level of schooling was completed. The wages guide that we provide outlines this in summary. The Clerks Private Sector Award also had a commencement date of the 1st of November 2020 for the latest national wage increase. The classifications of level 1, level 2, level 3, etc. are found in Schedule A of that award, and it's useful to look at the job and responsibilities, not again the person or their experience, and see if you can match those. If you would like to discuss whether you're applying the appropriate minimums, of course, please get in contact with the Workplace Relations advisors. We also now outline the junior wages, the more commonly used ones anyway. The Clerks Award has the unusual provision of allowing annualised salaries in recognition of the professionals who work under it. In any case, it's strongly recommended that whatever allowances are intended to be covered by that annualised salary or any perhaps additional hours of work that would otherwise be covered by penalty rates be specifically explained in the contract of employment with each clerk. The very unique part of our industry recognises that motor vehicle salespersons may well be around the workplace for hours at a time and then be frantically working to close deals and talking to customers at all sorts of hours. In recognition of the commission-based history that these employees have, they may be paid a fee or percentage for how much they sell. Those arrangements are to be in writing. We strongly recommend that you keep the commission-based side of the employment and payment separate to the employment contract. Our award allows that, and there are issues that and complications that can arise if you entangle the employment contract with the commission arrangement. The commission must, of course, always be as much as they would have earned if they were paid by the hour under the minimums required of the award. This arrangement needs to be regularly audited. We suggest on at least a 3-monthly basis that the number of hours and the equivalent that would have been paid for the ordinary rate of pay at least be offset by the commissions and minimum wages or minimum 38 hours that's actually been paid. In terms of non-motor vehicle salespeople such as finance and business managers, even service advisors, they can be paid and need to be paid the minimum wage plus penalty rates, and this may be averaged for additional hours worked. Depending on the focus of whether it's a sales focus or an administrative focus will determine which award applies to service advisors. This page repeats some of the issues which we have already covered. Some employers pay an attendance bonus. How this is to be applied should be written down from the beginning of when you're starting to pay it. Does it include public holidays? What happens during annual leave or sick and personal leave? If this is not clarified from the outset, an employee may suggest, or an ex-employee may suggest it's some form of a gift. And if that wasn't the case, that arrangement should have been in writing for clarification. Other terms and conditions of employment which can affect whether or not an employee claims whether they've been paid correctly or not can include superannuation, the ordinary hours worked, the pay slips, whether or not they're provided. It is really important that they be given by the employer in a timely manner, and whether or not timesheets need to be provided. There are also issues of requesting annual leave in writing and the taking of any form of leave, that be confirmed in writing by the employee, even if it's a text. But the question is always, how will that be recorded and linked back to that individual? Stating the number of hours worked expected and how much additional hours may be needed should be clarified from the beginning in any workplace arrangement. The process for authorising leave and productivity can be done through policy and procedures. Whether individual flexibility agreements are needed comes down to what the intention is of the employer in what they are paying and how they are paying it. Starting with, of course, what's in the employment contract and is there job descriptions which relevantly reflect the work being done and what the expectations are. Thank you. This now concludes this webinar. We've covered quite a few topics, each of which could be dealt with much more detail. I'm sure many of you will go back to your workplaces and offices and start thinking about how these topics affect the way that you employ people, and if there are any better ways of giving your workers assurance that you are doing all the right things and minimising any risk of claims being made against you, against the business, and causing the stress and grief of defending yourself when you know in your heart of hearts you've done nothing wrong. Paperwork is always important, and contracts are very, very important in that they need to reflect what was intended. Contact the MTA Queensland Workplace Relations Advisors for further advice and assistance. Our email is info@mtaq.com.au. Our phone number 07 3237 8777. Thank you. Bye for now.